Hey, good afternoon. This is Wednesday, May 25th, and this is Neil doing the quick little free market update here in post market. Nvidia just reported the market does not like them. They went out about 169. They're trading down close to 150 on an $18 expected move. So the only good news there is they're within the expected move, but that's about the only good news. It's got the post-market NASDAQ and S&P is a little bit under pressure, but not enough at this time to change what I've got on my mind here for us with regard to this higher time frame analysis. Okay, so let's get kind of back to, I've been off for a couple days also, not vacation, but nonetheless not in front of the markets either. So I'm sort of settling back into current price action, which, by the way, is almost exactly where it was when I left last week. So nothing's changed, and that's important because that means that this thing has been, the S&Ps, for instance, has just been sideways around essentially the same price, largely around the same price, for a week now. And to take you back a little bit, if you recall, we were discussing the importance of that bullish bearish over under line in the sand, and we termed it to be at that time 39.45. I think we can maybe make a small adjustment on that. It appears per the price action since that observation a week ago that the more appropriate and finite kind of level that you want to kind of lean long above, short below is actually about 39.30. It's either 30 or 35, so I'll split the difference. Call it 39.33. 39.33. Okay. So that's a small adjustment, but that's not a big thing in the overall context here. And so what you're looking at here on screen right this minute is a weekly chart, and this goes all the way back to the COVID lows. S&P's 2174, I believe, at the lows down there. Middle of 2020, which rallied to, just at a rapid rate to an incredible 48, like 05 or something up here on the top by late 21, right? Just before we started this new year, and of course prices have been breaking since. And this is, I think, important because I want to take and kind of show you what's happened. In hindsight here, what we've got is since the beginning of the year here, the Fed's been pretty clear about what they want to do. They're moving towards tightening and easing off their balance sheet and simultaneously raising rates to curb this inflation narrative. And as a result, stocks are coming off. But they're not coming off in a scary type of a frenzy. This is more of a structured, methodical type of a liquidation. And I say that because if you look at the VIX, look at the volatility. In fact, I had a question about that not too long ago, and that was a good point, good question somebody raised. Said, what makes you think lower? I mean, if you look at the VIX, it's not exactly screaming that that there's fear in this market that prices are as a result then likely headed lower. And that's a fair point, but the VIX doesn't have to be blowing off a top or something in order for prices to be structured and methodically kind of just working their way lower, and that's what we've got here. So it would be different if it was on a fear type of a basis or a fear campaign. Then the VIX would be elevated, but it's not right now. It doesn't have to be. That's the point. It doesn't have to be. Prices are lower, and they're going lower. In my opinion, they're still going lower. But don't necessarily look for the VIX to be wildly bid, in the process, because it does not have to be. And there I can point to several times in the past where it simply was not. And prices broke without without the vol spike. So, but follow me here. All right, from the bottom we go. The highs prior to the new year. What happens? We come off. Market finds a low right here. It goes into a really nice uptick for several weeks, 3-4 weeks. And in hindsight, we can look back from the COVID lows to the new all-time highs. We can look back and realize that that was a 236 fib that caught near perfect and bid into about a 618 retrace from that 4805 high to the fib 236 level here. That was about a 618 retrace that then subsequently broke again, and that's where we find ourselves now over a period about the last 8 weeks. You could argue 7 or 8, but I'll call it 8 weeks. So where does it break on this last low, coming into one of those two bearish levels that we had outlined for it? Not the second. The second, if you recall, was 3740 down here, which still I think is yet to come, but later. And it touches off right there. The lows happen to be the 382, right? So what's happened is it's broken into a 236 bid back for a 618 of that break, and now followed through to the 382 level here and stalled. And it stalled on Friday in late day, touching off with a 100-point bid late day that leaves a pretty good excess low here. That was late Friday last week. So what we have right now is an inside range thus far this week, which certainly could change, could follow through to new lows tomorrow or Friday. I don't know, but we're going to get to that. But what we have is a pause, a hesitation, a harami, or an inside range. And what I suspect will be the case if this ends up being an inside range week this week with a higher low and lower high, is that this thing's going to start to work its way back up into that retracement, kind of a melt up that we've been talking about since, I guess, last week, where I was looking for if bullish, then up back into the 4,200. All right. And if bearish, 39.45 from last week, then target the 38s and the 37.40s. The 37.40s never came. Here's where we find ourselves right now. I want to consider 39.33, the new line in the sand, adjusted from 45 last week. And as long as the bulls can maintain that level, then I'm looking up. Lean long above that, short below. I'm looking up from there, right? First target, there is a balance, a small balance, but a multi-day balance print at 40.15, 15.16, 40.15. That would be T1. Not a big deal. I mean, shoot, we were almost there today. That's not a big deal. Above that, we get into testing last week's highs of that 4,100, right? And I just would not look for it to hold this time. I would look for it, however, to trade the next one above, the next level above that would be 41.27. Now, what's interesting about that price is you can do this on your own. Take a fib from the 4,600 highs to the 38 lows, and you're going to find that to be the 382 retrace, which is also, coincidentally, the non-farm payroll price from May the 6th on non-farm payroll right there at 41.27. That's going to kind of coincidentally also be a fib level on the retracement back on the way up. And then the next level is, well, wouldn't you guess it, but the level that we've been talking about for a long time anyway at 42.20, that's the half back. From this 8 weeks of selling, 42.20 is the half back. So that means 39.33 line in the sand, maintain that, look long above, short below, but long above that, just up into 40.15, which would literally probably be tonight or tomorrow, provided the 33s hold, right? And then it'll be bound for testing last week's highs, not to hold this time. Trade 41.27, which is a fib level and the non-farm payroll print. Come back in off of that a little bit and then make its way up And this could take a couple of weeks, right? Because look at the last bid that was in retracement. That was 1, 2, 3. You could argue maybe 4, 3 to 4 weeks of. All right, so this could take a couple of weeks. So now, what after? It's going lower. Okay, what after that? It's going lower. It's going lower either right now or after this retracement. I still say it's going lower. I told you we'll see. I'll see you at 3,600, and we'll talk about things there. But it's going lower. That's what I think. I mean, can't tell you what it's going to do until it does it, obviously, but I'm telling you what I really think. And that's and it'll be there on a 200 period moving average on the weekly chart, on a fib level, on a test of this consolidation right back here, prior to the the COVID high breakout, come back test, and then and bid off of that. It's coming into this area. I don't know when, but that is what I believe. And so whether it's straight down from here or retrace first and roll, which is that's actually what I prefer to see, a retracement that rolls for then the 3600s. It's either way, it's headed that way. So what if below the 39.33s and they can't hold? That's the level for the bulls to want to hold. What if they can't hold that? Well, the first thing it's going to be looking for is last 2 weeks ago. The 2 weeks ago low was 38.55. That would be my first, that's the first thing I would be looking for. Main kind of initial, anything below 39.30, I'm looking for 38.55. 38.55. That'd be the first thing I wouldn't want to let them out until you get there. Look, if that can't hold, then we're dangerously close to this not being an inside week, and this actually, producing some lower lows, in which case I'll throw out a level just in case, and it would be 37.30. I'm not really looking there, but anything, I guess it could, right? So I have to be prepared for, well, what would an extended bearish target be? Okay, 37.30. But, you can kind of hear in my voice that I'm just preparing for what if in that case. That does it. I mean, look, there's a level here that really appears that it just is the spot that really needs to hold. It's tested several times today. It's been testing since and proved a decent order flow level from last week. It's been testing again today, and it appears to be 39.30-ish, 33. And that's the spot. That's the one to hold. And if that's the case, then we'll go out this week with an inside week. This is actually a trade setup, this extended range, this wide range from last week, and then this relatively normal ATR range of this week, and it's an inside range. We have a trade setup that we do in the trade room on any time frame, any ticker, any time frame. This happens to be a weekly chart, but it's a reversal setup. And so as long as this ends as a normal range, inside range, then that would be to look up. Start looking up next week, and that's what that looks like to me. So I can't do any better than that. You got over under targets above and below a preferred course that I'm trying to leave you in wide open to either, but also really trying to let you know what I see too, which is it's time for a retracement. And then we'll meet again early next week and prepare for for the next leg. So I'll leave you with that. Good trading. Nice evening. Look forward to being with you again at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me